Hello guys, good evening. It's 11:15 p.m. this side GMT Nigeria time. So sorry guys, I've been sick, having some testing issues. Well, yeah, that's by the way. So I shared a trade entry. I shared a setup at the WhatsApp community. All right, and that was a good. So you guys requested that I should do one of those in the community reach out to me and say that I should do a breakdown video and post on YouTube. So that is what I'm doing, and I also promise that I will do that so that you guys will understand clearly how I saw the setup and the reason why I shared it to the community. Alright, so I'm going to do a breakdown analysis on Good to explain everything for you guys. Alright, and if you're not yet on the Telegram channel, there is a link on the description link that is on the description of this video. Click on it and you'll be directed to the Telegram channel to have a lifetime access of the educational content that I have uploaded here via a video format, and also all the sessions that I'll be doing every Monday, every Sunday. You will see them there so that you will learn more about the chart analysis. And also the link to the WhatsApp channel will be dropped in the description of this video. Oh god. Alright, so now I'm going to start over from the higher time frame right here. So one thing that I want you to understand, as someone who analyzed the chart to have your trade opportunity and stuff like that, you should understand what your candle is, right? Your bearish and your bullish candle, and knowing that, you have to understand that it works with time and price. So talking about time and price, I talk about the open of the candle, talk about the low of the candle, talk about the high of the candle, and then we talk about the close of the candle. I use the voice notes to do a brief explanation of this and the reason why I was looking at that. Alright, so this one will be used for your bullish candle. Alright, so if the candle wants to go bullish, it opens, then give you the low of the candle depending on the day, depending on the month, depending on the day, the week and the month. Give you the high depending on the day, the week and the month, and then it gives you the close depending on the day, the week and the close, and the month, and vice versa for your bearish candle, also used in the yearly candle. Alright, so when we are focusing on the daily candle, we are focusing on which session gives you the high of the day and the low of the day. The opening of the day, we always know that Asian is always the opening of the day, and we do know that of the session, starting off the day, and New York closes the day, right? But still yet the high and the low can be formed on any of these sessions. Alright, so that is focused on the daily time frame. On the weekly time frame, the weekly candle, we are focusing on which day will give us the high of the week and the low of the week. We always know that the open of the weekly candle is always on Monday, right? So Tuesday could give you the high, Monday could give you the high of the week. If you want to go bearish, Monday or Tuesday could give you the high of the week, and then the rest of the day continues. Now that is a story, a topic on its own. And when you're looking at the monthly time frame, you are focusing on which week we give you the high and the low. We always know that the opening of the monthly candle is always the first week, depending on which day, right? And then when we're projecting a yearly candle, we are focusing on which month give us the high and the low of that year. We always know that the opening of the yearly candle is your January. Alright, so understanding this candle theory and the algorithm price prediction, then predicting what the market wants to go to next or what the market wants to do could be easy for you 90% of the time. And with that understanding, you can know when to invest in a coin or in the stock market, and then know how long you're gonna hold it and know how it's gonna project for the year. Alright, so let's start. And one thing you should know that is that there are majorly three formations of the candle, which is a big and engulfed candle, like there is massive momentum, and then we have that of the hammer. So that of the hammer, which tells you you're having a massive sell. If you are looking, if it is looking this way, you know that this is a massive sell. If it's looking vice versa, you know that that is a massive bullish candle. So I will explain theory behind candlesticks later on. There is a topic on its own also, and I think that is something I will explain to the mentorship. And the next one to understand about your candle is that we have that of the doji candle. Alright, these are the three major types of candles that we always should understand. Alright, so this is the best for me, and also this one. Alright, but when it comes to this one, this is where we always get manipulations and frustration, emotional damage. Alright, because the doji candle tells us that the market is ranging, we're having it ranged. Alright, so Monday could give you the high and the low at the same time, depending. Monday, Wednesday, Thursday could give you the highs and the lows, and most of the time it happens during those big news impact that occurs. Okay, so back to this on gold. So gold have been massively bullish, right? We're having a recent high and higher low. This is the high, this is the low. Remember, the beginning of January I predicted a bullish move, and it played out, and I kept quiet all this while, and I also did the end of the video, right? So because whenever we have hit the target and when we having price at the premium, I don't have the interest to analyze that again, alright, until something else occurs. Now we always do note that whenever there's an expansion, there's always a retracement. Now before you confirm retracement, you should possibly look for confirmations. Alright, so for me, when I'm looking at this gold, this is where I am having my breaker structure from the higher time frame, and I cannot say that the market we trade all the way down to monthly fair value gap. Most of the time it will just continue going higher, and we just do a little bit of drawdown and then continues to go higher. So that is, by the way, in case it comes down here to the future, in possible future, we're paying attention to what's likely to happen there. So we are just focusing on what we have right here. Alright, so let me remove the drawings that we have right here. Okay, yes, remove them. Alright, so I don't think there's anything else left here. So let me go back to the monthly time frame. So this is that of January high, and the February opened and massively trades above it. Alright, so we opened, traded a little bit, and then continued to go higher. Alright, so that is the focus there. Now we are going to focus on our weekly time frame, so we say and know which week will give us the high of the month, and we are focusing that on February. So we had the February start. This is where February start. This is the first week, second week, and we finally have the third week. Now those that were in the mentorship when I was did it part 3 of understanding according price prediction, and knowing which week will give you the high or the low of the month. I always say when it comes to the last month, either the third or the fourth quarter, we are most likely to expect a reversal. All right, the same way we always get to see New York reverse during the day. All right, so that's by the way. So this is the third week right here. All right, so we've been trading massively bullish, and the third week was here. The fourth week, which is this current week, trade opened and we have it trade higher. So now going down to the daily time frame. Now let me talk about what we have right here. All right, so most of us, we see this and we call it a break of structure. All right, now from the analysis I shared to the community, I talked about something called Wyckoff, and this is a purge. I repeat all this thing all of the time, and if you go back to my old YouTube video, I talk about smart money setup, something like that, and I explained this. All right, we are seeing price hunting that high multiple times, so it is purging that high. All right, and this favorably gap is not going to be valid to me, for the reason that most people understand that we have this black and this blue candle, so they are not in the same candle pattern, so it is a less probability favorably gap, and also didn't have a structural break, but we're at a purge of liquidity. And this is not a smart money setup. There was no stop hunt or violation. All right, so looking from the daily time frame, this is Monday, right? Now those also, they have been in the mentorship. I talked about daily candle trade and weekly candle trade, right? So Monday opened, and Monday was what we see doing that liquidity sweep right here from previous week. So you can now go down to the 4-hour time frame. This is what we are having on the 4-hour time frame. All right, that's what we're having on the 4-hour time frame. Now refining that favorably gap we saw from the higher time frame, we're refining it down to the 4-hour time frame, and you can actually see price has already traded into that favorably gap. It trades higher, trades in a choppy wiki way. There is no any other inefficiency or bullish order block that was given, and then we finally see it doing what right here, a hunt. We did not have a breaker structure. Now I come to this place and I label this as a Y curve distribution phase. All right, most of you must have heard about Y curve, but you don't understand how that Y curve is formed, or where, in which area are you most likely to see the Y curve distribution phase. Now I will give you a hint on how to know where the Y curve is mostly seen. The Y curve is mostly seen when the algorithm is purging on liquidity. All right, so if you're talking about distribution phase, it should happen on a core at a high. All right, because a Y curve distribution is meant to accumulate orders. It is meant to manipulate retail traders and purge them. That was why you see those trade lines and stuff like that on the Y curve PDF, right? Each job is just to manipulate traders, take those orders, and then distribute the price. All right, so it needs to build up that liquidity. So that's what we have right here. We have this high being purged multiple times. That is a previous week high. All right, that is a previous week high. Now I don't want to come over here and start labeling the ST, AR, BC, the buying climax, the uptrust, and the uptrust after distribution. That is not what I'm going to do, but you should download the Y curve PDF. It's free. All right, so that is by the way. Now this is it right here. This is the purge. Monday gave us the high, Right now, the most interesting part is what Monday did and what Tuesday also did at the same time. Monday opened, it trades lower. Nothing serious happened on Monday. Alright, so we always know, and I always say it all the time, those also in the mentorship, I always tell them, ignore Monday. Alright, Monday is the opening of the candle. So our main focus of trading should be from Tuesday, Wednesday, and Thursday. We can ignore Friday, as Friday is the close of the weekly candle. Alright, so this is that of the for our 1 hour time frame. I don't know why most of you label this as a break of structure. You don't label this as a break of structure as long as there is no volume, there is no impulse in the candle, and there is no structure be given, like a trend, a bullish trend be given to you. This is an overall consolidating market. This is meant to purge liquidity. It's been sweeping traders, manipulating them all the time, creating a distribution phase. All right, now we will now be focusing on here. I know most traders somewhere we are focusing here has a favorite gap to buy from, and price triggered them in. Now the expectation is they want to see it break this high, but what actually happened? It failed. All right, it failed. So Monday is telling me that it's not gonna push this price higher, but there was no confirmation also to sell. So we'll be expecting Tuesday to give us a confirmation, so that we will know that yes, our weekly projection is going to be the full body candle, as long as Tuesday violates Monday's low, giving us a structural shift. Right, so Tuesday finally opened. We trade lower, not yet confirmed. All right, not yet confirmed, and most traders might be looking at this order block to demand buy from. Why will you be buying from this demand when you don't have a structural break? Monday stayed protected. All right, Tuesday opened, did not show an interest to go to the high. They already knows what it is doing. It trades lower. Anybody who is here has been taken out. Someone who entered from the favorite gap and expecting to continue going higher has been taken out on break even also. Price trades give us this high, and the interesting part was that Tuesday gave us an area of inefficiency. Very, very interesting for what it did right here. So all of the bad side inefficiency has been filled up, has been cleared out, and for it to sell, it needs to create an opposition. All right, so that was why this bearish favorite gap or sell side inefficiency was given to us, but we cannot trade that. All right, we cannot trade that until we see a confirmation. All right, so price still on Tuesday came back and trade into that area of inefficiency. And the most interesting part, I made mention of it on the WhatsApp community with a voice note, that the reason why I say it is gonna be a valid one is because of we finally have a stop hunt, and the confluence there is the stop hunt and also it trading into that sell side inefficiency. Now after the stop hunt and trading into the sell side efficiency, we finally have that confirmation that we are waiting for, which is this structural break. All right, so there was a break of an opposing trend right there. So that is a break of market structure, and this one is going to be our change of character. All right, so the Wyckoff has been completed after we have the structural break. All right, that completes our Wyckoff distribution phase. All right, so this right here is the buying climax. Put that at the top. This right here is automatic rally, or I think it should be at the bottom. And this is an ST. I forgot this stuff, but we could go back to the PDF and we'll understand. Or I will just go here and I will say Wyckoff schematics. Alright, when you click on the Wyckoff schematics, you can go to the images on your Google and look for the distribution right here. Yeah, I got it correct. Alright, so we have BC, we have the AR, the ST is always seen inside. Alright, so that was correct. So the ST is always seen inside. Then this should be a sign of weakness. Now this sign of weakness shows that we did sweep a low, alright, and still yet did not what is it called, cause a structural break. So all of this is a long story, but I can easily identify Wyckoff when I see it with my eyes. Alright, so seeing it purge this high and giving us that sweet schematic. Alright, something like this is not a Wyckoff. A Wyckoff always stays in a range. Alright, giving you something similar to support and resistance. Alright, not a random choppy market. Okay, so that's by the way. So after seeing that, Tuesday gave us a confirmation by causing a structural break, and then finally left behind a bearish order block or a supply zone right there for us. So this should be the test. Alright, so the confluence, the inefficiency, which tells you that the algorithm finally pumped. There was a pump of money. The institutions, the big banks, they finally pumped the smart money people. They finally pumped money into that to break out of all of this. All right, so every retail traders resting right here, support and resistance, has been taken out of the market. So price have to pull back for the purpose of hedging and trades back into the supply zone, and we finally used to put. So if you had to take your profit, at the nearest sell stop. That was what I mentioned right there, and also could take a profit right here. And my own point of interest of profit that I made mention of was previous month's low. Sorry, not previous month's low. I think this was where I wanted to take profit. I think it's this one. Yeah, that one, or likely this one. Alright, so that is the projection for the month of February on the third week. Okay, so you can also target previous week low, and that was what it has already swept right there. It swept previous week low right there. So that is a perfect what swing trade. So yeah, I hope this explains it all. I don't think I'm leaving anything behind to explain for you guys. So when the month of March opens, we'll see what will happen if we continue selling. And you know, all of this has been a trade line, right? And till March opens, then yeah, we keep on projecting until we finally know which month will give us the high of the year, and we know if the year of 2025 for gold is going to be bearish or if it's gonna end up being bullish, because last year ended bullish. So we are just looking at what 2025 will do for us. So yeah, that's guys. So check out the description link and the description, and you see the links right there. Take care and be safe. See you next time. Bye.